Hello, welcome to Pensions in 10 with me, David Brooks, and my colleague Andy Knight-Stevens. This week we take you through what is going on with the markets in reaction to what's going on in Iran, and also we help the Pensions Dashboard Programme call out for volunteers to test the dashboard system. Okay, Andy, can you bring us up to date with what is going on and what you're seeing happening in reaction to the events in Iran and the Gulf region?
Yeah, no worries there, Dave. Let's get straight into this. So obviously, look, trustees and listeners will certainly not have avoided the news of the recent escalation in Iran and the Gulf region. So overall, look, this has led to higher oil prices. We're going to talk about that a bit later on, and increased market volatility. So I think overall equity markets, they definitely have weakened. Credit spreads have widened just slightly. The main impact for DB pension schemes is markets, they're assuming higher inflation now than they did last week for sure. The moves though remain, they're smaller in volatility than we saw around Liberation Day last year. That was, if you remember, with Trump with his first tariff announcements, those big tariff announcements. However, look, that's kind of the position as it stands. It's ongoing and it is evolving. So it's behaving more like a contained geopolitical shock right now than a sort of systemic financial event. So that putting it into context, just going through a few of the asset classes for the listeners. So in gilts, so look, yields have risen as a result of this, and that's meaning potentially higher inflation. Markets are now pricing in maybe one rate cut this year rather than two that they priced in the previous week or before. Longer term yields, though, if you contextualize it again, are probably lower than they were at the end of September last year. So that's interesting. Corporate bonds, again, spreads, like I said, have widened slightly, although they're still far from the level seen during April last year, the Liberation Day announcements. Equities, though, look, markets have fallen. Investors are adjusting their risk appetite and factoring in those higher energy prices. Although, look, I think it still remains within typical range of equity volatility. Sort of VIX index, the fear index has ticked up. It's just sub 30 the last time I saw it. But yeah, this morning at the time of speaking, Asia Pacific and Europe and the markets have sold off. But overall, I think if you look at the overall position, it's about the same level of some of these market indices they were at the start of the year. The USD strengthened versus GBP a bit. And let's talk oil. Barrels pricing because over $100 now. So that's for the first time in 4 years that's happened. So there's definitely fear around energy and supplies there. But I think the main thing is, yeah, there's volatility and it's that inflation piece due to the energy issues coming through. There's quite a lot in there, but overall, schemes are, as you're diversified with high hedge ratios and not too much growth left in your scheme, you're probably not seeing that much material impacts. LDI, we're thinking, the existing gilt and LDI assets are behaving as expected in most of our clients. What we're seeing, that LDI is far more resilient than it was during the 2022 crisis. We've not seen anything yet. The yields are going up in a disorderly fashion. Corporate bonds, yeah, the value might fall in the short term slightly, but that is not affecting currently the ability of companies to make coupon payments. Equities, we talked about, slight sell-off, but contextualizing it on the back of a really strong last year performance, obviously region dependent. They are about start of the year level. FTSE's still up though since the start of the year, and multi-asset funds, look, they're diversified and that helps reduce the impact of short-term market movements. So we're not seeing major disruptions to generalized comment for funding levels of schemes. However, look, it is an evolving situation and we continue to monitor what's happening. That's it, Dave, overall. I guess the wider comment is we're seeing a lot of these events, aren't we, in the last few years? We kind of say they're tail events and one in X year events, but we're seeing them all the time now. So I think it's part of the course in the world and where we are. So it's just keep an eye on it as it develops.
And what about individual savers, people in DC schemes? We would never want people to react to these sorts of things in a way because it's hard for them to time the market or make any constructive moves because generally we don't really know what's going to happen next. But what are we seeing? Are you seeing people do anything, or do you think people should be doing anything or thinking about?
I mean, it's the age old, we say, don't panic. Like, this immediate shock is happening and it's evolving. So anyone with large growth allocations in DC, so that's the younger members, but obviously this depends on what you're doing in terms of drawdown. You might still have a large growth allocation. We've talked about equities there. There has been a sell-off. So all things equal there, you're going to have a lower pot than you had, but we still believe in the long-term outperformance of the gilts of equities, and DC members are holding presumably for the longer term, again depending on preferences. So we don't know where this will go yet. We don't know if it'll peter out and or there's resolution, but I think don't panic for DC members. But obviously the higher growth, yeah, you're more exposed to these shocks in equity markets.
And you were talking about the oil prices and things. Just on, so for the longer term, we're probably likely to see inflation coming through, or is that just possible? As again, like you said, don't know how long this goes on for, but
yeah, exactly. So oil, and then you've seen the gas price shoot up as well, and obviously UK is quite exposed to that gas price as well. So we'll definitely see energy price going up. So obviously you'll see inflation go up, and that's coming through into market expectations as well. So that impacts businesses, that will impact consumers, and then we've talked about interest rates and cuts there. So it seems like markets pricing less cuts in. So it is going to hit consumers and businesses, but again, it's evolving. Whether it's a short-term shock on that oil price, I see it's time of speaking, but it went over $120 a barrel and has come back down a bit. We have to just watch and see where this goes, but don't panic. Don't make rash moves. Let's see how it develops.
Yeah.
Okay, and Dave, there's been an announcement or a call to action regarding dashboards now, hasn't there?
Yeah. So we're gradually getting through the testing. So the MAPS and the Pension Dashboard Program have made a call out to the industry to help them find people new user testers to sign up for the next phase of testing that's going to just about to kick off. In particular, looking for people that are over 18, haven't taken all their pension benefits. So that's quite a broad range of people. So, friends, relatives, but in particular, they're looking for people with confidence barriers around financial literacy, numeracy, digital skills, and technology. So people that perhaps, I think the testing they've done till now has been primarily from within the pensions industry. So obviously people you would expect to have a high level of financial literacy, probably pretty much aware of where their pensions are already, and used to using things like this, computers and whatnot. So ideally, they'd want to find people that don't have those confidences, and so potentially can highlight some issues, with the way the dashboard is going to work. So they're the people I signed up because I just want to do it, but they probably wouldn't let me in.
You don't have these issues, though, do you?
No, I know. I was honest. I didn't sort of create. I was ticking yes, high performance, confident, and all that sort of stuff because I do. But please let me in. I'd like to do it. I want to sit.
You didn't want to miss out, yeah.
But they won't. I'm sure they won't. But yeah, so listeners out there, then you can go onto their website and you can find the link to register. It takes about 5-10 minutes to go through this questionnaire. Going through where you think your pensions are and a bit about yourself and how confident you are of these things. And hopefully you'll get selected and you can help push through dashboards and make some improvements and highlight the quirks and the things that don't quite work, and they can fix those now. So when it launches to the general public more broadly, that it works. So yeah, get out there and get testing.
Okay, thanks for listening or watching. That's all from us, and Dave will be with you back next week. I'm off to just have a look at the markets and see what's happening now.